There's no doubt robots are great for improving efficiency, accuracy, and safety. However, they present a high upfront cost and present challenges to maintain in terms of logistics and technical expertise. Robots as a Service, RaaS, is a business model that eliminates large upfront investments for customers, turning capital expenses into manageable operational costs while minimizing financial risks. It also enables seamless upgrades and ongoing maintenance and support. Under a RaaS model, customers lease robots with regular payment made on a daily, weekly, monthly, or annual basis, thereby enhancing customer accessibility to robotics. This departure from a traditional product sales model of robots as standalone products also benefits robotics business providers, mainly by generating a more predictable and recurring revenue stream over the long term, while also opening up the potential for higher margin recurring revenue streams. Though if done incorrectly, these kinds of arrangements can have lower gross margins compared to standalone product sales, as they involve accounting for ongoing service costs and the amortization of the robot's cost over the contract term. Yet one indirect benefit aside from RaaS being flexible, cost-effective, and a scalable solution for customers is the possibility for robotics companies to foster stronger customer relationships due to the constant and prolonged contact over the span of RaaS agreements. This model can also be built upon to create integrated ecosystems that address broader business challenges and delivers greater value to customers. For example, adding the software solutions for analytics and extra functionality, like the incorporation of AI. Furthermore, the transition to RaaS can increase deployment numbers of robots and overall customer adoption. Now, if you'd like more on robotics and other companies, follow Ascencore. Thanks for watching and have a nice day.